Hello and welcome. Joining us is Kiran Morzaria, CEO of Cadence Minerals. How are you today?
Good, and how are you?
Very good. Thank you again for joining us. So, jumping right into it, we've heard about your plans to restart the Azteca plant, and it's not the main Amapá project. So, how does this fit into the overall development strategy?
Yeah, well, you're right. Amapá is our flagship. The Amapá Iron Ore Project is a fully integrated iron ore project with mine, rail, port, and ready to rehabilitate and in place. We had an updated pre-feasibility study that gave it a post-tax NPV of 1.97 billion, 15-year mine life producing high quality DR grade about 5.5 million tons per year. We also requoted some mining contracts, and that got us into the lowest cost quartile production delivered to China, around $55 per ton. So that is our major project. But Azteca is the bridge that gets us there. What it is, it's a smaller plant. It's backed by a $44.6 million offtake, with Cadence only contributing 10 to 15% of that monies. And the agreement is still conditional on some final due diligence, which is in essence assay work, which we expect to be not an issue. So it's a standard step forward for us, or it's a great step forward for us it's the bridging from getting from Azteca to Amapá.
And I want to switch gears a little bit here. I think we should mention that there's word that some shareholders remain concerned about dilution from recent placings and also about how aligned management is with investors. So, how is the company addressing these concerns while ensuring funding?
Yeah, it's true. Cadence, like many other natural resource companies, has relied partly on placing. Now, the beauty of Cadence's model is that it's an investment company as well. So even though we have relied on part placings, a lot of the capital that we've relied on to fund and invest in the Amapá project has in fact been through the returns of other investments that have delivered, in some cases, like the European Metals Holding, 140% return. So while we have had some dilution with placings, we've always sought to mitigate that dilution either through good investments or, in this case, with Azteca, most of the financing to deliver those cash flows is through a $4.6 million prepayment from our offtake partner, with Cadence only contributing 10 to 15%. Instead of shareholders carrying 100% of the costs through placings, they're funding a fraction. And in return, Azteca is expected to generate that cash flow, $32 million. And on top of that, the way that we're participating is through an offtake partnership. So we get our cash back plus about a 70% internal rate of return. So that's a strong trade-off as a whole.
And looking ahead, if Azteca plans generating revenue, which you had just said is planned, how much difference can that make in reducing resilience on, or reliance, I should say, on future placings and accelerating development?
Look, Azteca makes a real difference. From the very first shipment, the plant is expected to be cash flow positive, with revenues flowing straight into, as I said beforehand, the definitive feasibility, any further permitting, early works, maintenance. That reduces the need for equity at exactly the point where most juniors are seeking large CAPEX for the definitive feasibility study and forced to raise it that way. And with a fair wind, assuming that the partly refined material that goes through the Azteca plant is larger in volume, has a higher recovery rate, it could even help cover the equity portion of the eventual project financing of this project, the Amapá Iron Ore Project. That's significant because it means that we can fund part of the mine restart without diluting our equity position in the Amapá project, and therefore also diluting Cadence's shareholders' interest in the Amapá project. So when you combine that with Amapá scale, as I mentioned, $1.97 billion of NPV, 56% IRR, and those low cost figures, the value gap is clear. Cadence current market cap is only a fraction of the implied value of our 30% stake. Closing that gap is what drives our funding strategy. Generate cash, reduce the dilution, and prove that Amapá is on track to become a world-class low-cost iron producer.
Well, thank you for filling us in and all the information. I hope to speak with you again soon. Thanks, Kiran.
Thank you.
Again, in case you missed it, that was Kiran Morzaria, the CEO of Cadence Minerals, and I've been Brianna McCutcheon.